Alright, welcome back everyone. So in today's video I'm just going to do a quick update. We're going to talk about the markets, then I'll look at charts. So my computer is running really slow. I don't want to reboot it because I have like a bunch of charts open and then I will lose them. So bear with me. It might be slow sometimes, but we'll get through this hopefully. And I don't have to restart this. Making videos takes hours and hours sometimes, especially if you run into a problem like this. Okay, so let's talk about some news. Alright, so Powell spoke, I believe it was Wednesday or Tuesday. I'm not sure. Today's Thursday. It's the 14th. So, Powell reiterated that they don't want negative interest rates, which is, I was expecting this. I was saying it'd be dumb for them to do so. It's not going to help anything, really. If anything, it's really bad for savers and everyone else in the economy, including small business owners. Keeping your money in the bank, you're just going to lose money. And it messes up the entire credit system. I mean, it doesn't make sense, first of all, and it just will over time explode the debt even higher. Although negative interest rates and high inflation is a way to reduce the debt because it's worth less, but there's really not much upside to it. And for the financials, the banks themselves, I mean, none of it makes sense. Although the futures market is pricing in negative rates by the fourth quarter. So the market, Wall Street, essentially what they're saying is we want negative rates. And will the Fed give in on this? I don't think so, not with Powell. Although Trump, I mean, it's pretty asinine, honestly, for him to be tweeting, we should take advantage of these negative rates because all the other countries are doing it. Well, Europe's been doing it for quite some time. I believe Japan did it. Listen, it's not like it helped their economies at all. It didn't. But for the short term, what it does is it props up the markets. And Trump's a real estate guy, and it sounds great to him. Like, yeah, I get they'll pay me to take out a loan, basically. In the short term, that sounds great. Why not? You take out a loan, they pay you. But that doesn't work in the real world, especially on a macro economy. It's just going to drive everyone further into debt, and eventually there will be defaults, right? So that's not going to happen. But the fact is that the Fed is losing credibility, and the market's like, no, we're in charge here, because if the stock market drops, then the entire system just goes under, basically. So it's basically it. The market did go up yesterday and today after Powell spoke because I mean, he was still dovish. He would still rather do endless stimulus. Why? Because they could get away with it for now. Another thing, what else did I want to say? So I just lost it. I forgot what I was going to say. I'll talk about deflation more because it looks like we're going into a deflationary environment with some inflation. I've been saying that as well, but for now, the Fed would rather just keep extending their balance sheet. It's almost at 7 trillion now. By year's end, it's definitely going to be above 10. They'll probably keep going and going as long as they can, and as long as the world needs dollars to stay afloat. But eventually, like I said in my previous videos, emerging markets are going to start defaulting eventually, and that's where the demand will go away for the dollar, and then all the debt that's being accrued by the US and Europe and China, like all these countries, all that debt's going to start coming due, but especially for the US, because the US could get away with racking up its credit card like 10 times more than everyone else around the world because of the world reserve currency status. So at first we're going to have deflation, right? Then we're going to see emerging markets defaulting around the world. And then we're going to see more stimulus to stop the deflation. And eventually the debt will be so big. And at some point there will be a return to normal feeling among the public or something close to it. Like, we're never going to get back to 2019 levels euphoria ever again, in my opinion. Because there's so many people lost their jobs. I mean, but at some point people will think, oh, okay, this crisis is over with, it's returned to normal. And whenever that happens and then they start spending some more, all of a sudden inflation will pop up. Or something else might trigger it, right? China could just dump the U.S. treasuries, and then what that'll do is psychologically, globally, I mean, the Fed will buy it up, but psychologically that signals for, the U.S. dollar world currency status being done with. That doesn't mean that there's going to be anything replacing it. The only thing that I could think of replacing it is gold. They might try to do some seriously, like some global issued crypto something, which is stupid in my opinion. We're going to get a sun flare at some point. I guarantee you within our lifetimes, the next like 20 years, something like that. Power go out. And not just that, if there is a war, right? They're gonna target the power grids, and recently Trump just passed something to beef up security around it and cyber attacks and whatnot. And I don't think the public will trust it and go along with it, especially after they see what's about to happen with inflation. Also, in the newsroom, I posted something. There's some inside info, not inside info, but information that you're not going to get in the West. It was brought to my attention by one of the people in the chat groups. There was a news agency that had intel on China possibly getting ready for a hot war, not a cold war, right? So what are the likelihoods of that? I think it's high, and I think it can happen. I mean, it's bound to happen, right? Because they want to become the next world superpower. So as long as the right, let's say, as long as Trump, right, or pro-America people are in charge of the White House, that's a very highlight. Like, it's gonna happen because it's either them or us. Now, if the left gets in charge, they're just gonna sell out the country. In my opinion, that's what I think. So, I mean, they all have ties, okay, and that's why I can't speak what I want on this platform. It's all tied into one, and I made that video in the newsroom. I told you guys, uncensored, uncut, unfiltered. Like, I'm not filtering what I'm saying. And I told you guys what's really going on. But I can't hear, right? Listen, Sweden did fine. And I know not everyone's going to make it, but you know what? I mean, the longer this goes, and the more they have to print and do UBI, universal basic income, and all that, there's a higher and higher likelihood of like hyperinflation, and that's going to there's going to be way more people that are going to die from that. Trust me. Actually, just from what has already happened, the amount of job loss, it's already you're going to have more people lose their lives. And besides all the loss of absolute freedoms and I mean, what, and not just that, it goes much deeper, right? They're gonna, all I'm saying is, I mean, there's a line drawn, and I think that line is being crossed now, and I think the masses are waking up, which is a good thing. And I think if they keep pushing and pushing with more, draconian, tyrannical stuff, there will be a breaking point, and that's where like the elite kind of, um, see. There's this thing, right? What you fear the most is the most likely to happen. There's that saying. Well, they're doing more power grabs and trying to micromanage and control the masses. And the more they do it, the more the masses see what's happening and they get angrier and angrier. And there will be a tipping point. There will be that 100th monkey. And it will come. And when that happens, if they keep going, right? But when that happens, all this shit ends real quick. Like, it'll happen. How do I put this? In the U.S. alone, again, if there was a hot war with China, right? The biggest line of defense is actually the civilians and the population, because like 60, probably 70% now after this crisis are, they have self-protection, right? And they have more than just one weapon per person. So a lot have just maybe one, but there's a large percentage of them who have, like, who knows, a lot. And that's why the US can't ever be like really invaded. Or if they do try it, I mean, it's not going to be easy. If they even make it, right, to the coast. Is it possible? Anything's possible, guys. But what I'm trying to say is, those same people, if they feel like people in charge are hardcore enslaving them, and once that line's crossed and a threshold is hit, critical mass of I can't take this anymore, uh, it'll all end real quickly. I mean, there's probably like over 200 million Americans, and they're not that stupid that, people in charge believe they are. I mean, it seems like they are, and they put up with a lot, but there's always that fine line. And I think I think we're getting close to it, especially once people lose their jobs and people start going in your homes. And I don't want to talk about it because they can't anymore. Go to other platforms. I'm there as well. All right, so the lazy W recovery. This is interesting. So, a rationale for a highly dangerous lazy W. If I could go to a chart without freezing, I'll show you the chart after this. I have to just close out of these windows first. The U.S. is already experiencing extremely sharp job losses. We project 26.9 million jobs lost between March and May. Some more data came out, and it's like 30 some million. I told you guys it's going to be around 50 million, which is insane. Out of like the 180 or 90 million Americans who had jobs prior to this, when you lose 50 million of them, that's There's less people working. I mean, yeah, there's less people working than working, population wise, including the elderly and young. That is not sustainable. This implies an unemployment rate of 21%. Now, it's like, it's already, this must be old. When was this? 0514. Yeah, it's today. It's above 21%. It's 24. And after today's jobs data, it's probably 30%. So that's 30% aren't working right now. I'm telling you that's going to go higher because of the immense, and not just that, it's all about timing, guys. So this is my theory, not financial advice. So for now, we're going to try to get back towards normal in the middle of the summer. And a lot of people are going to go back to work. Not all of them. I'm just saying a decent amount. And companies and businesses will bring them back because they took out those SBA loans. And what that means is they have to keep their employees on the payroll for a certain amount of time. And it's really not that long. It's like 4 months or something. So they'll bring back their workers, keep them on. They'll pay them out the cash they got from the stimulus. And then they're gonna pay attention and watch if their business increases, and it'll increase probably towards the end of summer. But then the real economic problems are gonna really start showing themselves, and these overleveraged companies, banks, I mean, you name it, everyone who's been over leveraged is going to start going bust. You're going to see bankruptcy after bankruptcy after bankruptcy late 2020 into early 2021 and the rest of 2021. And there won't be a return to normal. The majority of people right now think there's going to be a return to normal. And you have to keep that in mind psychologically. The masses actually think we're going to return to normal. And we're not. The bubble's been popped. It's just been reinflated again, but there's still a gaping hole. So, probably fourth quarter, it's going to be a weak holiday, shopping season. Prices are going to start rising by then. 2021, this is my theory. 2021, we're going to see just massive layoffs and bankruptcies. Okay? And those companies which brought back their employees, even though they don't really need them, because it's not like volume is going to come back. It's not like retail sales are going to bounce back out of nowhere. But they'll keep them on because they want that loan to turn into a grant. You see, if you don't fire your employees, but you take the loan from the stimulus, and you keep them on for 4 months, then it turns into a grant. And a grant is pretty much a loan you don't have to pay back free money. Okay? And then that's what they're going to do. And they're going to see that, no, business isn't returning to normal. And then after the time is up, they're going to lay off all their employees. And then when they do that, it's a vicious cycle. And I don't think a lot of people are going to go out and shop like they used to. They were already barely shopping in 2019 and 18 because they were so heavily indebted. Well, after all this crisis, people are going to be even more indebted as they maxed out their credit cards to live. And once the welfare, pretty much, the unemployment benefits plus the 600 on top runs out, and some people are arguing, well, they won't run out. They'll do UBI. Okay, well, if they do that, yeah, a lot of people are going to get a lot of money and they're not going to work. And then guess what? There's not going to be products and services. And then guess what? That's when your hyperinflation shows up. But that's like the only thing the Fed could do. And they sort of have to do this stuff because the dollar will keep strengthening if they don't, because of the global not glut, but demand for dollars because everyone's so over leveraged globally, and the world currency is technically the dollar. I know it's kind of it's a little confusing and complicated, but that's why I keep repeating it. All right, so business rehiring, hoping to rebuild lost sales. RCS estimates nearly 10 million jobs will be regained, lowering the unemployment rate to 15%. No, I think we'll peak out at higher, like 30, 40 percent, and then maybe it'll bounce back down to it'll come back down midsummer, late 2020, and then a lot of people will, and then the stock market's going to go up, but it's all based off of faulty hopes, because believe me, the economy's not going to recover from this because it's built on debt. So that's simple. This premature relapse also happened in the 1918, that, I can't even say that word, reopening of the economy without the right programs. And what happened in 1918? Read this if you're looking at my screen. Okay. Reopening of the economy without the right programs in place causes a second wave cases in the fall. And then there's that as well, right? The risk of a second wave, which could be worse than the first one. If you could imagine, if you think this was bad, what if we get a second wave that's worse? According to them. Personally, I think it's already mutated to be pretty much a wicked cold. I can't say certain words, guys. All right. States re-implement shelter in place, and the weekend economy freezes. Weekend businesses capitulate and close permanently. By October, 6.9 million jobs will be lost from the premature opening. Many of the jobs losses will become persistent or permanent. So this is what, but at the same time, it's weird, right? Because as this all happens, it's like the Fed is going to be there, just pumping trillions and trillions. Eventually, I think we're going to see a 20 trillion Fed balance sheet, which is insane. And people are going to say, yeah, but there's no inflation. There's no inflation. It's because people are scared to spend on discretionary things, right? So you will see, but you'll still see, okay, so you'll see inflation like for things you need to survive, food, but deflation in essentially everything else, big ticket items, this and that. The stock market, they're gonna put in some sort of permanent bottom by like just printing trillions, buying stocks, doing whatever, and then we might actually see some weird W-shaped chart on the S&P and the Dow Jones and the major indices. And I agree, this is possible. Now, even this is artificial. It's too high. It makes no sense. And it shouldn't happen, but the Fed's going to do it. Because they can, as long as the world needs the dollars, right? And then eventually, maybe it'll make new all-time highs for a little bit, but then eventually it's just going to airdrop eventually sometime. And that's when the dollar finally gets hit. I don't know when though, like, because I can't anticipate global psychology of everyone in the world and timing, and then there's the unknowns and more black swans and whatnot, right? So but you know what the free market would have done, of course it's gone, the picture. What the free market would have done is the Wall Street cheat sheet chart, right? So I'm going to bring that up for anyone who's new, although I know there's no one new because they're removing my subscribers and I'm not getting any traction anymore. That's why I make less videos. It's not worth it, right? If I'm not growing, I'll survive anyways, but You know, by now I thought I would have had like 50,000 subs and this and that, but I've said too much and they're on to me and they won't let my channel grow. And it is what it is, guys. You have to deal with the cards you're dealt with. I'm bringing up the chart right now. Alright. So here it is, right? So W recovery. The W would be something like this, right? And then it keeps like going up slightly. But this is what the free market would do right now. So right now, or soon in the next week or two, the market would start dumping based on reality and just the reality of the situation, the fundamentals, and the fact that the bubble's been burst. And this is what the free market would do the rest of this year. It would just completely annihilate the markets. But we no longer have a free market. And, you know, free market doesn't take into consideration endless money printing and bailouts of entire mega corporations and Wall Street. Okay. And it is disgusting. And, you know, people later on are going to complain about it. I'm surprised no one's complaining now. It's probably because they're getting stimulus money or, you know, relief. But they will once they start feeling the pain. And they'll realize that who's paying for all this? There isn't like a pot of money out there the Fed has or the government has. It's you're paying for this. The peasants are through inflation. So if they're not directly getting you on your paychecks, they'll just print it out of thin air, and then every paycheck's worth less. Instead of a 10% pay raise every year, not that any of us or anyone has gotten that in the past 10, 20 years. But it's like your boss coming in every year and telling you, yeah, this year we're going to have to cut 10% of your pay. But it's much sneakier if prices of goods and services keep going up slowly, and, you know, the packaging has more air in it, you get less food, things slowly shrink in size, and, you know. All right, so conclusion and implications of our lazy W pattern here for the markets. So this crisis is setting back the economy for many years. By year 2021, considerable demand for nearly every sector of the economy will have been permanently destroyed. Employment levels by year 2021 will be roughly the same as 2015. I think it'll be worse. It will take until mid-2024 for jobs to recover lost ground. I highly doubt that as well. Do you want to know why? Because if there's more regulations and more just less free society, jobs don't come back. Freedom is directly correlated and associated with economic prosperity. Because if you're not free to work, if you're not free to create and innovate, and you have all this red tape and all of these unnecessary, time-consuming, money-consuming regulations and laws you have to comply with, then you're not free, and you're not able to better your life, better yourself, create a business, create jobs. What happens is the state's in the way, and everyone is going to starve, especially because they're printing so much. Interest rates will stay at historic lows into 2024. They will stay into historic lows as long as they could do it. And then someday the bond market blows and the interest rates just keep going up and up. And it doesn't matter how much money they print because it's worthless. And nobody cares. Like, that's what happened. With high unemployment, the Fed will have no incentive to raise rates. Near-term unemployment peaks at over 20%. No, near unemployment will peak much higher. It'll keep getting worse with time, especially with inflation. See, this article doesn't take into consideration that eventually we are going to get inflation. And when we do, inflation destroys businesses and jobs. Because, when you have to spend all your money you make or all the money you get from unemployment on literally food, then you can't spend it on anything else. And that's why unemployment's going to just keep rising. Inflation is much, much worse than deflation. Deflation's good because with deflation you could actually afford the bare minimum essentials. And then you save a little, and then slowly things get better as everything gets rehypothecated. No, it's not the word. Restructured, right? Businesses go under. More responsible, smarter people come in. They buy up the business, pennies on the dollar, and then they make it more efficient and stronger and more resilient to crises like this, right? All right, I'm done with this article. You can find this all by Tyler Durden. You guys know who. It's right here up in the right-hand corner. It's cut off halfway for a reason, right? We could cut off the whole relationship. War of words between U.S. and China is heating up. All right, so the reason I brought up this article was basically because what I posted in the newsroom, and I mentioned it earlier. Historically, when there's a rising superpower and the old one is diminishing, and you can see it all around us in the West. I mean, come on. People are soft. We have snowflakes. Come on. Safe spaces and you name it. All sorts of degeneracy. And if you can't see it, then I'm hoping there's a re-emergence of the family unit and getting back to the basics like it used to be, like prior to the 60s. But I think for that to happen, we're gonna have to go through some, I don't know, some mass awakening or something, because the youth has definitely been brainwashed by everything, by public schooling and TV. So the answer to all that is human nature deep down knows and feels it. And I think people are just getting sick and tired of the ridiculousness. Everything on the TV, pop culture, everything. It's all garbage by now as well. So the pendulum always swings back. And when it does, okay, so when the pendulum swings back from this era that we're coming out of, which is globalism and the lefties running everything, when it swings back to the right, it's going to overshoot, and it's going to be, all right? Historically, that's what happens, at least. All right, so let's look at some charts. So I don't make too many videos. I'm going to try to make more, but I'm starting to lose viewers, and a lot of people are leaving this platform as well. When you go to the other platforms, it's really hard to grow because there aren't those people are pretty set in stone on the people they watch. It's like they don't search around. Plus, the search engines are horrible. The other platforms are really crappy. But I have to plug myself. So let me show you guys the gold miner ETFs. Now a lot of people, even experts, say like Tudor Jones, right? That there's more upside in Bitcoin. No, there isn't. The mining stocks have outperformed Bitcoin this year, last year as well, the year before that. It's just no one talks about it because there aren't that too many people in the mining stocks yet. When everyone is talking about mining stocks, that's when I'm going to be selling and leaving them with the bags. Where's the chart I want to show you guys? Unbelievable. I do have a lot of windows open here. So give me a second. So the mining ETFs have gone up in the past 4 weeks, like over 100%. Some are up 140%. Now, if you're an actual trader or a seasoned investor, and you use options and you can make 10x returns, like I did. Like I put on some call options, and 100% move up on an ETF will get me a 10x return. When was the last time you think you're gonna get a 10x on Bitcoin? I mean, the price would have to be at 100,000, and I wouldn't go on any of those leveraged exchanges. Those are all scams. They wick up and down, even the new ones, and they will just take all your money. That's what I hear. Alright, let's just use this. Let's just use GDXJ, because I can't find that chart. So in the private group, I told you guys to buy this dip. Load up if you can. And whoever did, I mean, you did 100x. No, you did 100% return if you just bought that or more. If you use the call option or leverage up, you did 10x. Yeah, it went up 126%. And it's still undervalued. That's what I'm trying to tell you guys. Where's the other chart that I just had up? So I've shown this before. This is a weekly chart. The orange line is the price of gold itself. The blue line is the mining ETF. I believe it's GDX. GDX is the large cap mining companies ETF. There's way better ETFs, guys. Okay. But everyone knows GDX. It's like the big main one. This blue line, by the way, it's over here, so you can see it. It's at 35 GDX. Okay, but the last time gold was at 1750, GDX was at $60, but right now it's at 35. It is coming up. And last time I showed you guys this, it was down here and I told you to buy the dip. Then it was over here and I told you to buy the dip. Now it's here and I'm like, buy the dip. Because this blue line needs to catch up with the price of gold historically. Okay? Because the mining stocks are so undervalued because everyone has tunnel vision. They're like horses with blinders because they've been in a bubble for over 10 years in the stock market. And people are ignoring mining stocks, the majority. But that's why it's undervalued. And as inflation starts coming up and there's more and more problems, they're going to start moving into mining stocks because that's where all the gains are going to be. Everything else is overpriced. They're either going to move sideways, down, or slightly up, but it's not going to outpace inflation. So as the stock market slightly goes higher, even if it melts up, it's only doing it because they're printing so much and there will be inflation. And mining stocks are going to outperform everything. Even Bitcoin or altcoins, it's going to outperform it all. My opinion, not financial advice. Consult your licensed financial advisor. This is my theory, okay? And I'm not a licensed financial advisor. By the way, stocks, investing, all extremely volatile, all extremely risky. Do not invest in anything you're not willing to lose, and I mean that. And it's volatile out here, and learn to trade. Join the private group. I'm going to start making more tutorial videos for them at least. All right. Also, I think gold's going to go higher. We're going to test and make new all-time highs this year. So if this orange line goes higher all the way up to here or even higher, this blue line has a long way to go to catch up to it. Now, if you think GDX is going up another 100, 150% is a lot, the other ETFs are going to go up like tenfold. And then some of the individual mining stocks are going to go up 20, 50x, something like that. And then if you know how to use call options and stuff like that, then you start making like 100x returns, like crazy stuff. Now, I'm not saying that you're going to be able to do that. Only professionals should, use leverage and options and all kinds of stuff like that because it's extremely risky using that. Your account could go negative, this and that. But for the people who are, been trading for like 7 years, you know what you're doing, you know how to manage risk, you know how to handle, you know how to have cash on the side, you know how to manage a margin account and leverage and all that. Like, you're gonna, and even if you don't, you're just a simpleton, it's okay. You're still gonna have some stocks do crazy stuff in the next year or 2-3 years, like do 100x moves. They're out there, and I believe I have quite a few or a handful. So the wealth transfer opportunity is still here. Go to my website, join the private group. It's a one-time payment, and then it's $10 a month. And I might raise the $10 a month to 15 as inflation starts rising, and so do in these mining stocks continue to rise, and we start seeing some massive gains. Because honestly, I'm undercutting everyone. $10 a month is nothing. The type of stuff I'm doing is usually cost $200 a month. I might as well just raise it now. Because I've had some awesome calls lately as well. Like earlier this week, real awesome calls, like 40% moves. All right. I'm done plugging. My dog sounds like he's mauling someone in the living room. So here's the lazy W recovery that we're talking about. Which, what I told you guys, and some idiot in the comment section is like, well, you just gave us all the scenarios. You didn't tell us where it's going to go. I'm like, you idiot. I'm not a prophet. And it's manipulated. I let the market tell me what it's doing, and then I adjust and profit off of that. That's what trading is. Trading isn't being Nostradamus here and predicting the future, although my track record is pretty damn good. Probably the best on YouTube, to be honest. But most of the time, I don't know. When I figure it out, I'll let you know. That's how this works. The free market would do this. crash back down to... I'm telling you what I do know. This is what the free market would do. It'll take us all the way back down to 2008. All right, that's what the free market would do. This is what the Fed's probably going to do. They're going to get it juiced up a little higher. Maybe revisit. This is the Dow Jones Industrial on the daily. Test the 200-day moving average. Then another pullback type of correction. But the Fed's going to step in. So we see a higher low. This is a higher low compared to the last low. You see that? And then more stimulus. Fed's balance sheet, going out of control. A little bit of euphoria once midsummer hits, late summer, that return to normal is going to happen. And then we go back up. And then again, I think there's just going to be a lot of volatility, right? Like pullbacks and stuff. Who knows? And then if I take this to the weekly, so we could zoom out. This is the weekly. I'm zooming out. Let me remove all these. I'm going to draw that W lazy, what they were talking about. See, I do believe... Okay, this is taking for... I wish I could just highlight everything and delete it. All right. Like this. This is technically a W. Lazy W, right? Something like this. Or let me draw the W. Okay, I made it red. That's the W part. And then it tails off. And it'll probably be very volatile, who knows. Because as time goes on, economic data is only going to get worse, really. There might be a month here and there, third or fourth quarter, where things seem a little better for a short period of time, and economic data even gets a little better because a lot of people are going to go back to work. And this might actually happen sooner, might happen midsummer. I don't know. Timing, it's not that easy. The short-term stuff. But long-term, by 2021, economic data is going to be worse. Okay? And we're going to see a lot of bankruptcies. And then when we start seeing that, that'll be in 2021, right? Around this area. Okay, I drew that way too big. Because this is the weekly. Don't pay attention to the timing when I draw. I'm just drawing pictures representing. I mean, this goes out until 2022. I don't take that seriously. I'm just drawing the pattern that it's going to be, but don't look at the time on it, the time horizon. Okay. So right here, bad economic data, let's say. And then we get a huge sell-off, pullback or something. But then they come out with more stimulus because the world still, for some reason, needs dollars. But then, emerging markets start defaulting. They're defaulting. And then eventually, yeah, we're going to get massive inflation. The world reserve currency is no longer the dollar. Maybe a war breaks out or something. I don't know because I can't predict those again. And then party's over. Let me zoom out. Like people who comment stuff like, "Oh, you're not predicting the future right now." I'm like, it's because I can't. Nobody can. You don't know what's going to happen. That you have to know what you don't know to be successful in trading and investing. The idiots who think they know are the ones who lose all their money. And then eventually, yeah, this will happen. Will it happen 2022, 2023, 20? I don't know. All I know is the end game. And all I know is metals are going to go up. That's all I need to know to make it. It's all I need to know. Most of my investments are long-term holds in mining stocks. And then I have physical, right? And that's it. Everything else is really just a swing trade. Yes, I trade a lot of things. I have a bunch of trades. I trade. I don't want to give away my trades because I'm still gonna trade them. Here's another trade I had. Nordic American Tankers. Bought that down around $3. What else? Some things look like good buys right now. Alright, I think I'm gonna give away something. I shorted the cruise liners. Huge gains on that with put options. Like 10x gains. SQQ, I like trading that. That's how I short the market, by going long on inverse ETFs. I'm long on some oil stocks. Sometimes I even long like the NASDAQ, this and that. Alright, anyways, let's talk about currencies and treasuries and bonds and stuff like that. I'm going to cut this video off pretty soon because we're coming up on an hour. Here's the dollar monthly. I'm telling you, as long as it's in like this range, they could keep printing on the DXY. As long as it's literally like around 94 to like 105, that balance sheet of the Fed's gonna continue to expand, and they're gonna do it all, guys. They're gonna do it all. As long as the world lets them, they'll do it. And actually, like I said, the U.S. markets and the U.S. economy looks better and stronger than the rest of the world because they could get away with it. And the more they print, the more the U.S. can bail itself out. That's how the world sees it. Now, in the long run, it's actually going to cause an even bigger mess. But, Europe just printed $1 trillion. Technically, that's like $3 trillion in U.S. because their currency is so much weaker. And that's why the euro is looking real weak. I think once the euro breaks below 1.04, the euro union, pretty much the entire thing's going to break apart because all the countries are really, there is no union there. They only care about themselves, and Germany doesn't want to bail the rest of Europe out. Now, they're in trouble themselves now. The entire world is. So everyone's out for themselves, and that's what historically happens. It's all Alright, so I talked about that. I showed you guys. Now, if the euro breaks down and the euro European Union breaks up, that's going to be positive for the US dollar. And believe it or not, Powell and Trump and the US does not want to see the DXY above 100, because that's really bad for US trade and its trade deficit. So if the rest of the world falls apart before the US, they're going to print another 10 trill, maybe another 20 trill, and they're going to get a trillion, and they're going to get away with it. This entire time, metals are going to go up. Deflation, inflation, it doesn't matter. Metals go up the more they print. And that's why it's the most undervalued asset in the world with the most upside potential. All right. What else we have here? Here's the Dow Jones monthly chart. Right now, this still looks like a dead cat bounce or something like that. Let's take a look at the weekly. I'm not saying that's what it is. I'm just saying that's what it looks like right now. This looks like it's going to roll over and do the Wall Street cheat sheet chart, right? But if you pay attention, you look closely, see this huge wick right here? These wicks, there's a lot of buying underneath here. And everyone in the US has been conditioned to buy every dip, and everyone thinks this is the dip to buy. And they might be right short term, again, because the Fed's really in there with them buying. And through, I mean, they just announced they're doing ETFs. They already purchased, like, in the past 2 days, 150 or more million or something like that. And that'll turn into billions before you know it. And that's corporate bond ETFs. Let's look at the daily. We have a green Ishimoku cloud starting to form on the Dow here. And we have my light blue candles. These are the indicators I use that are very good. If you know how to trade, they could help you out a lot. I think they're going to maybe push up the market for 2 more weeks and get us testing my blue equilibrium line in the 200 and the 100-day moving average. On the Dow, that's about 26,000. If we go back to the weekly, we're on technically a 6 count. So if this week ends higher tomorrow, if the market closes higher tomorrow on a Take Back Friday, above the 200-week moving average, which would take you above 23, let's say 23,900, then this week's candle will look like a hammer, and this will flip it to a 6, and that's 6 out of a 9 count to the upside. So it's either 2 more weeks of upside or 3 more weeks of upside. I think it'll be 2 weeks because, I think people will take profits once we even get close to the 200-day moving average, which will be, again, up at 26,000 on the Dow. So I'm kind of expecting this. Here, let me draw this again. It won't quite reach it, and then a pullback correction. Then the PPT will step in, plunge protection team, and they'll push it back up. So I'm looking for a nice quick swing trade to the downside, like a shorting opportunity. And I think we're going to have some awesome trades in the next few weeks. And then that's for the private group. Besides that, guys, I'm still bullish gold. Oil is starting to rebound. I told you the bottom was in. As oil, there's a nice correlation between gold and oil, and as the oil goes higher, it's going to push gold higher. And if we just look at just a chart of gold, this is a chart of gold, this blue line. We are so near all-time highs now that we're going to break through it, make new all-time highs, and then there's no ceiling. There's no resistance left. And once we make new all-time highs, even these junior and small cap mining stocks are going to start exploding this spring and summer, as I've been saying for the past few months now, since that dip buying opportunity. And whoever took advantage of that, and you know, and I even discounted my membership for the private group. Whoever took advantage of that, you're sitting pretty right now. And you know, the opportunity's still here, but that window of opportunity is closing very, very quickly now. So go to my website, smash some likes, share my videos so I continue to make videos, because I can't grow my channel organically anymore. They won't allow it. So share my channel, smash some likes, leave anything in the comment section. It helps my videos, and I will respond eventually to them. And then there's a bunch of links below this video for free. There's a bunch of free chat groups. Hey, listen, there's a lot of people like nonstop posting conspiracy videos. Yeah, I get it. I'm in the boat, but chill out. Like, get a life. You need to stop spending time on watching your enslavement and living in fear, and start, I don't know, making a better future for yourself. Start a business, make money, pay attention to this stuff. But a lot of you guys live in this like state of like rabbit hole conspiracy and fear and anxiety. It's really annoying. And yeah, I share some of that stuff too, and I believe a lot of it, but chill out. Like, I don't want my chat groups filled with it. It's really annoying. And it puts me at risk, honestly. And one day I'll get mad and I'll just start banning. Ban. I don't care. I really don't. I'm the guy. I'll put the truth out there. I'll let society decide for itself what it wants to do, and the masses, and I will not give two Fs. Like, I don't care. Everyone chooses their lives, even society as a whole. I will just stand out of the way, and I will just leave, and I'll watch from a distance with a bowl of popcorn. Honestly, I'm at that point. So stop posting stuff in my chat groups, like the nonstop conspiracy shit. Like, it's really annoying. Like, I post enough of it. Like, I do it every once in a while. And, I don't want it to turn into... This is more about investing and trading, not your tinfoil hat shit. Alright, guys. Till next time.